Yo, what's going on, everybody? It's Modern Micro back with another video, and very next day, we see here that the SPY. This is gonna be a quick video, just as a quick introduction, just to check up on kind of what I anticipated, what happened, possibly could happen, and little portfolio update alongside that. But in yesterday's video, I touched on the idea that, hey, it was a great move. We see here on the weekly chart, we're up 3% in this past week. But, we didn't go anywhere. We seen overnight markets shoot up to 675. We dropped down to about 673. Yep. And then finished the day off at near 676. But, just a really choppy day overall. Decent moves, but stayed in the same spot. And what I said yesterday was, anticipate that to be the case. Um, you know, this is really just a checkup video on staying cautiously optimistic, and I think that's what I'm going to name the title of this video. And this is why. I mean, yesterday when we had popped up here, I had expected maybe a back test to 670, maybe even just below, retest and break further. But we just stood here, and I'm not saying that's not possible. That's not gonna happen. But we see here just how much overhead resistance we have in this chop, and to think that we are going to knife through this chop is a bit, you know, crazy to me. I gave examples of Nvidia and how we could just continue chopping for longer, and I think that'll be the case going into year end, or possibly until at least another 1 to 2 months. We created this base, fell below, did a nice head and shoulders here, and then jumped back up, but we're just back in the range. And alongside Nvidia, this can go back up to 690, 695, and there could still be downward pressure all the way back down to 670 and possibly 650. There is nothing here that is indicative of some sort of breakout. This is a 4-hour chart, but if we look at the daily, same thing. There's no breakout here, and rather, this could just be another lower high, and ultimately push this thing lower if things get really that bad geopolitically. I don't anticipate that happening, especially with midterms coming up, um, and and a new Fed president. But if that were to be the case, I think that would be a generational buying opportunity. For now, though, I think this is just another session of chop, and anticipate it. Sell premium, sell covered calls, put credit spreads, call credit spreads. That's the thing I'm gonna be looking for. It's just when things get too overheated and when things get too oversold. I think those are just the best opportunities here in this market. I believe that this should have never happened, but because it did, it propelled us a bit higher. We found a decent amount of buyers or people willing to cover short. Um, and so that's to say the market that I see, cautiously optimistic. You have winners, you have losers in this market, and that's really shown as well as well here. Sorry about that. As well here in my two biggest names, um, SoFi and Robinhood. We seen on this 15-minute chart how we jumped in overnight markets and into the futures. We gapped up all the way up until near $18, about 17.85, and then immediately sold off into the close. We didn't stay below 1625. We actually stood here at resistance at 1650, in bigger time frame resistance, that is, as we see here in. Let's see if I could figure this out. And here in this channel of downward channel, imagine this being a line won't do that right now, but popped up and sitting right on it. Same thing with Robinhood. They almost have picture perfect charts, and alike charts. So there's nothing to really compare here in terms of charts. They look relatively the same and relatively weak. So far, end of the day, up about 2%, and Robinhood around 3.5%. So not the biggest moves, especially when you have the S&P 500 jumping 2.5%, and the Nasdaq up over 3%. But again, this just goes with the same narrative that remain cautiously optimistic. There is still a lot of fear in the private credit market. There's a lot of fear in crypto, and so just for these two names alike, you still have the 20-day simple mover daily moving average coming up. I believe Robinhood, I don't have it pulled up here, but Robinhood is sitting in between the 20 and the 50-day moving average, while SoFi is just hitting upper head resistance with that 20-day. I don't anticipate any sort of breakout yet. I expect some sort of consolidation here, and we could look at a bigger time frame. I expect some consolidation here, and a possible jump into the 20s range. As soon as we get over 18, I think that's what we want. As soon as we get over the 20s, that's what we want. And furthermore, that's just what I'm gonna be looking for, is a jump from 18 all the way up to 20s. And Robinhood alike, we have consolidation over here at the 80s on the bigger time frame, and that could be an easy pop all the way up until $100. But that doesn't mean that we're done. I don't see a possibility where we are done in any sort of sell-off, and or possibly not, maybe not done, but an imminent jump from here, these levels, all the way up to 25 to the upper resistance is a really big, really drastic thing to anticipate, and I don't expect that at all. At least not till this year, till the end of this year. We could possibly see some sort of move here, till year end, going back up to the 25s. But I don't see that happening this year, and so it could be just a year of more consolidation and more buying opportunities. So if I was a dead company for years, 2022 to 2024, didn't move, had this terrible chop, and so if we sit around here, gradually progress higher, I am inviting that with open arms, because I feel like these two horses will share big tailwinds in the future, especially if we get some sort of gridlock in the government, and we just let equities rise and do their own thing. XLF, we talked about XLE yesterday. XLF had a great day today. The financial sector looked really great, and bouncing off the lows really nicely, and that's great to see. We had this consolidation just like the S&P 500 at a top of 56, fell all the way back down to 46, but we had a nice day today. We could look at the 1 hour chart. We jumped up here, it is overnight, and we held this level really well. I think if the financial sector is doing well, both of these horses will be doing great, and they'll do just fine. I don't see a situation where XLF breaks down and SoFi goes up, and I don't see a a possibility where XLF um, breaks out and SoFi stays flat or goes down. I think they at some point work in unison, and this is a really strong indicator that, you know, this really was these past 3 4 months has been nothing but just, you know, a sector rotation, market rotation. I stated that when we looked at energy yesterday, and I'll say this right now. Looking at the financials, we could look at tech, XL. Wow, what is tech? Healthcare, XLKI. Sure. We could look at tech. And why is it like this? Isn't it just SOK? XOK? There we go. Sorry, I got the wrong one. But we look at XLK, and, you know, on the weekly chart, it was the same thing. A breakdown from 152 highs. Um, sold off about, what was it? About 10% from the highs. And I think this is just a spot where, you know, you close any sort of gap that was on here and propel higher, or stay the course and chop a little bit more. Regardless, the S&P 500, Nasdaq, compiled of huge tech stocks. So if this is just simply a healthy move, and, you know, more of a consolidation eventually into a higher position, that's fine. This fits the narrative that this chop and downside pressure was just a situation where more money was allocated elsewhere, and as a result, you know, the biggest weighted companies of the S&P 500 was sold off, and eventually we move higher. That's how, you know, the S&P 500 works. You know, I went on a little rant last time we talked, and it was because of that. You know, every time, you know, the S&P 500 has some sort of downward movement, it's just preparing and bracing for a leg higher, and that will never change. That and that's just the outlook I see. You know, typical sector rotation is fine, is normal, and, you know, it was painful, especially, you know, again with the names that I stated, SoFi and Robinhood, but I think it is really just bracing for just one leg higher, and I'm not mad that financials and tech got sold off. I seen it as a buying opportunity, and that's what I did. That's exactly what I did. But anyways, you know, stay the course. Cautiously optimistic. You see on the S&P 500, we have a lot of overhead resistance, and, you know, it was a great day today. But, you know, we'll see what happens. Expect more chop, sell more premium, and collect rent. But other than that, thank you guys. It's quick video, quick checkup, and, you know, hope it adds any sort of value. But let me know in the comments below, and if, you know, you have any other thoughts, opinions. You know, I'm really new to this. I, it is a little weird just talking to a microphone and a screen, talking about what I love and follow every day. But otherwise, other than that, thank you guys for watching, and hope you have a good day.